SoFi is once again breaking the headlines with its recent announcement of its plan to offer convertible senior notes that will be due in 2026. Now, what is this all about? How is this going to affect investors? And is it a good thing for the stock or a bad? In this video, we will go over SoFi's announcement and go into detail on what this actually means. Welcome to Wealth Gambit. We just hit 1,000 subscribers, so shouts out to all of you who watch these videos, like and subscribe. Also, shouts out to June Lee for last week's comment of the day. Shouts out to you, bro. If you want to be featured, then comment something down below, and best comment will get shouted out in future videos. Do it! Also, please note that we are not financial advisors, so please do your own due diligence. Without further ado, let's get right into the video. SoFi has announced its plan to offer a $750 million aggregate principal amount of convertible senior notes that is due in 2026. This will be a private offering and is available to people who are believed to be qualified institutional buyers, pursuant to Rule 144A under the Securities Act of 1933, as amended. But the day isn't over, and the company has released yet another announcement. A few hours after it announced their plan to issue convertible senior notes, SoFi announced that it will increase its offering from $750 million aggregate principal amount of convertible senior notes to $1.1 billion. In the recent press release, SoFi added more details to their offering, stating that they intend to grant initial purchasers of the notes an option to purchase for settlement within a period of 13 days from and including the date the notes were first issued, up to an additional $100 million aggregate principal amount of notes, which is $12.5 million lower than their first announcement. The estimated date of the issuance and sale of the notes is scheduled on the 4th of October this year and is subject to customary closing conditions. So what exactly are senior convertible notes? According to Investopedia, a senior convertible note is a debt security that contains an option in which the note will be converted into a predefined amount of issuer shares, and it has priority over all other debt securities issued by the same organization, meaning a senior convertible note is a payment priority above all other debt securities. You might also be wondering, what are debt securities and what are we talking about? Debt securities, in simpler terms, are money owed by a company to an organization with a predetermined agreement. This can be collateralized or uncollateralized and can take multiple forms such as government bonds, corporate bonds, certificate of deposits, municipal bonds, preferred stock, or collateralized debt obligations, and even collateralized mortgage obligations, also mortgage-backed securities issued by the Government National Mortgage Association, and many others. Investors have the option to exchange their notes for a predetermined number of shares in the issuing company. So instead of a return in the form of principal plus interest, the investor would receive equity in the company. SoFi had announced that the notes will be unsecured, unsubordinated obligations of SoFi. The notes will not bear regular interest, and the principal amount of the notes will not accrete. The notes will mature on October 15, 2026, unless earlier repurchased, redeemed, or converted. The notes will be convertible by the note holders prior to the close of the business on business day immediately preceding April 15, 2026. Only under certain circumstances and during certain periods, and irrespective of those circumstances, will be convertible by the note holders on or after April 15, 2026 until the close of business on the second scheduled trading day immediately preceding October 15, 2026. The convertible senior notes that SoFi will offer will be unsecured, meaning this is not backed by any collateral, and unsubordinated obligations of SoFi, meaning it must be repaid before any other form of debt in the event that SoFi goes bankrupt or insolvent. In their earlier announcement, these convertible senior notes will gain interest payable semi-annually in arrears, but in their latest announcement, SoFi stated that these convertible senior notes will not bear regular interest. SoFi has further gone into detail about their initial conversion rate in their recent announcement. The initial conversion rate will be 44.6150 shares of SoFi common stock per $1,000 principal amount of notes, equivalent to an initial conversion price of approximately $22.41 per share of SoFi's common stock, which represents a premium of approximately 40% over the latest period sale of $16.01 per share of SoFi's common stock on September 29, 2021, subject to an adjustment in certain circumstances. Upon conversion, the notes may be settled at SoFi's election in cash, shares of common stock, or a combination of cash and shares of SoFi's common stock. I know what you're thinking. Who is actually eligible to buy these stocks? Who are these qualified institutional buyers pursuant to Rule 144A under the Securities Act of 1933? And is Nikola ever coming out with an actual electric car? Well, I'm not sure about the electric car from Nikola, but for the definition of a qualified institutional buyer, or QIB, that is a class of investor that is considered a quote-unquote sophisticated investor, meaning these investors have sufficient capital, experience, and net worth to engage in more advanced types of investment opportunities and does not require the regulatory protection that the Securities Act's registrations provisions gives to investors. A QIB manages a minimum investment of $100 million in securities on a discretionary basis, or can be a registered broker-dealer with at least $10 million investment in non-affiliated securities. A QIB can be entities such as banks, savings and loans associations with a net worth of at least $25 million, investment and insurance companies, employee benefit plans, and entities completely owned by QIBs. SoFi plans to settle the conversion of these notes by paying or delivering as applicable cash shares of its common stock or a combination of cash and shares of its common stock. SoFi also states that these notes will be redeemable in whole or in part for cash at SoFi's option at any time and from time to time, on or after October 15, 2024, and on or before the 30th scheduled trading day immediately before the maturity date, but if and only the last reported sales price share of SoFi's common stock exceeds 130% of the conversion prices or a specified period of time and certain liquidity conditions have been met. SoFi expects that the net proceeds from the offering will amount to around $1.078 billion after deducting the initial purchasers' discounts and commissions, and before the capped call transactions and offering expenses payable by SoFi. There will be an initial $32.02 per share cap price for the capped call transactions. This represents a premium of 100% over the last reported sale price of the company's common stock, which is as of September 29, 2021, which is around $16 per share, but this is subject to change under the terms of the capped call transactions. About $104.3 million of net proceeds is intended to use by SoFi to fund the cost of entering into the capped call transactions. The remainder of the net proceeds from the offering, as well as the cash on hand, is intended to use to pay fees, costs, and expenses relating to the offering and its related transactions and for general corporate purposes. SoFi entered into a privately negotiated capped call transaction with certain financial institutions. You might be wondering who these financial institutions are, and so are we. Do you have any wild guesses who? Share it with us in the comment section down below. SoFi uses the term capped transactions, but what exactly is a capped transaction? Capped call transactions are basically one or more call options that reference a borrower's capital stock. To give us a better look, here is how the SEC describes it. Capped call transactions means one or more call options referencing the borrower's capital stock entered into connection with the issuance by the borrower of any convertible note, including but not limited to the convertible notes, or in each case any replacement thereof, with a strike or exercise price, however so defined, initially equal to the conversion or exchange price, however so defined, of such convertible notes or replacements thereof, and limiting the amount deliverable upon exercise thereof based on a cap or upper strike price, however so defined. In its press release, SoFi noted that capped call transactions are expected generally to reduce the potential dilution to SoFi's common stock upon any conversion of the notes and or offset any potential cash payments SoFi is required to make in excess of the principal amount of converted notes, as the case may be upon conversion of the notes. In simpler terms, capped call transactions prevent overpayment or underpayment of these notes regardless of SoFi's status as a company at the time in which these notes are converted or redeemed. Hours after SoFi's press release of its plan to offer convertible senior notes, its stock price was down 3%. Why did SoFi suddenly offer these notes? Let's take a look back to when SoFi had its press release announcing its agreement to acquire Golden Pacific Bancorp Inc. In there, SoFi stated, quote, "If successfully granted a national bank charter by the OCC and Federal Reserve pursuant to its change of control application, SoFi plans to contribute $750 million in capital and pursue its national digital business plan while maintaining GPB's community bank business and footprint, including GPB's current 3 physical branches. And now it is offering a $750 million aggregate principal amount of convertible senior notes." What a coincidence, huh? This news is actually really positive. With the net proceeds, the company will be able to achieve its goals and finance its business plans. But we all know that business is about taking calculated risks. Will big investors such as Cathie Wood take this opportunity to get into SoFi? Or will the OG of investment, Warren Buffett, hop in on the SoFi bandwagon? Probably not Warren Buffett in our opinion. He really likes to keep it simple and straightforward with his stocks. But as for Cathie, we actually think that has a high probability of happening in the future. What are your thoughts on this? Do you think ARK Invest Cathie Wood will ever pull the trigger and invest in SoFi? Let us know in the comments below. If you found any value in this whatsoever, feel free to click that like and subscribe button and turn on notification bells to be updated on our latest video posts. That about wraps it up for today's video, guys. If you like this type of content, be sure to like and subscribe, and until next time, peace.